Now CLVS, see how much room this has to bounce up to the 20 moving average? This one has a lot more room just as a scalp, a bounce on a scalp setup. So on this one, I would watch possible long. First candle to make a new high would be over 58.50 on CLVS. So high of the last candle there is 32. We'll see if it breaks below 58 and then pops back up. Possible entry around the whole dollar. So now if it breaks up over 58, I'd get in for the break over the whole dollar. See on CLVS. As we dip down below, if it's truly weak, it won't be able to get back above the whole dollar. And that looks like kind of the extended volume off the at the very bottom. We would like to see increasing volume into the sell-off because that often signifies, the bottom and then the bounce off those lows. The problem though is, it's kind of like a 50-cent stop versus a good entry now. Okay, I've got a partial at 58, partial position at 58. And we'll see if this bounces back up. Stop is at the low of day. So looking for the first candle to make a new high and then a move up towards 59, which would be the 20 moving average. This 5-minute candle has a low of 57.56 and a high of 58.18. So there's the first candle to make a new high here over 58.18. That's a spot where I would consider adding if I was maybe had a slightly better cost basis, but right now I'll just hold this position as long as I can. So 20 moving average 58.98 is kind of the first target. I'll put sell orders out along the way. So cancel that. I'll put it at 75. First 5-minute candle to make a new high would be over 78. I'll cancel my order there for a second. Put it at 83. So there's the first candle to make a new high. We're right up almost to the 20 moving average, which is 99. You can see how we tapped that 20 moving average. There we go. On the ask with my last 250 shares at 59. Actually, I'll do 125 shares at 59.22. All right, sold those. So I'm holding 125 shares, and I could just sort of trim and trail this one, keep scaling out, but I'll probably just hit the bid if it looks like it's going to drop below $59. See how quickly it drops there. It's what makes it important to sell into strength. All right, all out except for 25 shares. And those should go in a second. There we go. All right, so CLVS, $900 winner, right off the bottom bounce scanner. So a little bit of a different trade than usual, but you know, obviously a decent setup. A little bit more risk at first because when I got in at 58, the low of day was 56, or it was 57.56. So it was about a 50-cent stop with 1,000 shares. It was like almost, you know, $500 of risk. But I knew that my target was 59, which was a point, and that's a 2-to-1 profit-loss ratio. Obviously, to buy 1,000 shares of this stock, I had to tie up $58,000, and of my $77,000 account, that's, you know, a pretty big piece of it. So, you know, there's that disadvantage as well, but this is the type of setup that you could take with 200 shares or 300 shares and just kind of scalp off that low of day scanner. This could have been a scalp trade where I just set a tighter stop at 10 cents or 20 cents and used like maybe 20 or 30 or 40 cents as my profit target. But on this one, I wanted to trade it the way the chart was sort of dictating, which is stop at the low, profit target at 59, which is the 20 moving average. Now, if we go back to FSLR, this was the other one that I was watching, and note how this, as a short, up here looked good on the 5-minute for a possible short at 36.18, the first 5-minute candle to make a new low. But the problem on this was that we were going to come down to the 20 moving average, which would be support. And although we broke it for a second, we really weren't able to get much. And the reality is, from 36.18 down to the 20 moving average was only, at that time, the 20 moving average was 36.09. So it was only about, 10 cents, 8-9 cents of profit potential. So that didn't have the reward potential. And in fact, I would look at FSLR as a possible long for the first candle to make a new high because of the way it's kind of curled underneath that above that 20 moving average. I would obviously like the 5-minute to be at the 9 moving average, but the longer it stays here consolidating sideways, the more it's going to look like a long, and the less it looks like a short. So just word to the wise on that setup. So when I'm looking at a possible reversal, when I'm doing this bounce off the bottom, that kind of rubber band snapback, I'm looking for it to be really extended the way CLVS was. CLVS was very extended to the downside, and I want to see the potential bounce up to the 20 moving average as my profit target. So if my profit target is only 10 cents away, it's not worth it. CLVS, the profit target was a full point away, so I had more than enough room to generate a good profit.